right, thank you everyone for coming. My name is Keara Mooney. I'm with RCG Mortgage. For those of you who don't know, we are a broker. We're not a bank. And we're super excited. So I'm going to go over our non-QM loan products. So just by like any answer, does anyone know what a non-QM loan is?
Like DSCR?
Correct, yes. Any other? So non-QM, super high level, just means non-qualified mortgage. So when you think of non-QM, think of no tax returns, no pay stubs. These are alternate documentation programs that your typical individual, they're not qualifying in a vanilla conventional loan, they're not qualifying FHI. These are individuals that are self-employed, they're investors, individuals that may own other properties and they're having trouble getting another property because of either high debt or they're just very cash based. So these loans, again, they're a manual underwrite. These are not your typical, you just run it through a system, you get the green check mark and you're rolling full steam ahead. So they're really tailored for just like self-employed and investors. I want you guys to remember that. Okay. So these are the property types that these loans apply to. So non-QM, it's not just for investment properties. These apply to your primary residence. So if you're going out there and it's your first time buying a home, you can still use a non-QM loan. So primary, second home, 1 to 4 unit residential. And again, anything above a 4 unit, that's considered commercial. Okay. Strict investment, mixed use based on scenario. So we can still loan on mixed use properties. Condo, tel, and condo. Any questions about the property types?
Okay. Yeah, no, in terms of the multi-family, up to how many families can what's the loan limits?
For the mixed use?
For the mixed, not for the
1 to 4
the
unit.
multi-family.
Yeah.
1 to
So
4,
it
6, 7, 20,
right.
30
It
families.
depends on credit. Like credit will dictate like how much they'll give in terms of lending.
Okay.
So that's why I really say like anyone that you have, like don't count them out. Come to me with the scenario. You can always send me like high level notes on the person. And if you think they don't qualify, chances are we can get them an approval in one of these programs. So we're going to dive into each of them, but just, if you hear they're self-employed, they're struggling to get a loan, shoot me a text. You can run the scenario. I work with a lot of lenders. It's not just one lender that offers these products. We have over 20 different lenders. So definitely keep it in mind. Okay, so these are the loan products we're going to go over. These are the most popular, the non-QM. So 12 to 24 month bank statement, your profit and loss program, DSCR, which you mentioned, that's the cash flow program, written verification of employment and asset utilization. And again, just remember these programs, no tax returns and no pay stubs. I keep saying that because a lot of people think that you still have to show documentation. There's documentation for these programs, but that's why it's called our alternative documentation. You're not showing the normal type of paperwork. So this is the first one we're going to go over, and it's the most popular. So DSCR, debt service coverage ratio. That's what DSCR stands for. So this program is strictly, you're buying a house, you already own a property within the last, you can see here, you have to own a property within the last 24 months. And when you're making this purchase, you have to make sure that the market rent is covering your monthly liability. So your principal, your interest, your taxes, and insurance. If the market rent covers that monthly liability, you're good to go. And that's it. There's literally no catch. They don't look at your debt. That's why it's called the debt service, because you're making sure that that market rent is covering your principal, interest, tax, and insurance.
Can you deal in investment property?
Yes. It can be on a primary or it can be an investment property. The only major thing is you have to have owned a property within the last 24 months. 20%. And if for any reason the market rent, say the market rent is $3,000 and your principal, interest, tax, and insurance are $3,100, technically it doesn't debt service, but in that case you just put 25% down, you can still get the loan. Okay. I know this is a lot at once, but pause me throughout. I don't mind answering any questions because I know I'm throwing like a lot of information at you guys.
Is there any flexibility on the 24-month seasonal period?
That they're pretty strict on, but again, I always say like if it's a unique situation, I'll always send it to the lender. Sometimes they can make exceptions. So I always submit anything and we could always see what they say. But yeah, so market rent is the key, 20% down, and then your buyer has to have 3 months reserves on top of their down payment. And when we say reserves, we mean your principal, your interest, tax, and insurance, multiply that by 3, and that's getting you your 3 months reserves.
Can that be, what instrument could be used? IRA, could be used
Yeah.
stocks or anything about life insurance or like what?
Yeah, you could, life insurance, I would have to double check, but you can show it in a retirement account, it could be in stock, it could be in anything, for the most part, just not cash.
It don't have to be liquid, right? Not
Yes.
liquid.
Yes, correct. Okay, and we can, again, at the end, we can jump back to any of the programs, I just wanna make sure we're touching on each. So the next one is bank statement. So this loan, I would say this applies to your business owners. They have large cash deposits that they're putting into a business account every month. Their tax returns might be, a lot of business owners, they're gonna write their tax returns down to 0. They have a lot of expenses. And they're not gonna show a lot on their return, but if you were to look at their cash profile, meaning how much they're depositing every month, they might have their business accounts might be very strong. So what the bank will do is they'll look at either a 12-month or a 24-month timeline, and they average all those deposits. So they'll take all the deposits, they add them all up, and then they use a 50% expense factor. If for any reason you strongly believe, or your client believes that they have only 30% of expenses, if their CPA is willing to say, my client only has 30% of expenses, we use the 30% expense factor, not 50. So this is, again, it's going off the deposits. They look at all 12 months of bank statements, they add it all up, and then they multiply it by the expense factor, and that's their income for the loan. Again, no tax returns, nothing.
Now, the DSCR loan could be either done in their personal or their LLC name?
Correct.
Either
Yes.
or, right?
Yep.
Okay.
And out of state, it doesn't have to just be New York. Almost all over the country, we can do the DSCR loan. So Pennsylvania, if you have someone in Texas, you can still do it. And the bank statement one, minimum 15% down, and you also need the 3 months reserves. Any questions on this one? Okay. Next is your profit and loss program. This is similar, but a little bit different. So this one is you own your own business and your cash deposits might not be strong, but you construct your P&L. It has to be signed off by a CPA. If they don't have a CPA, it can be a tax enrolled agent. So they're willing to state, this is my profit and loss for my business for 12 months or 24 months. And if their CPA will put it on their letterhead and sign off, they will go off of the profit and loss income. And again, 15% down, 3 months reserves, a little more aggressive. This program has a little bit of a higher rate similar to the other programs, but if they can't show it on paper, but they have a strong profit and loss for the year, they can lend off the profit and loss statement. Okay. And for those of you just high level profit and loss, your gross, like your receivables, and then any expenses that the business would have. So if they have like advertising, that's an expense, anything like that, those would be listed on the P&L statement.
If there's enough equity in the property, could the down payment be baked into the loan?
If the down payment for,
Yeah.
you're saying for the purchase.
Yeah,
Usually no, you're saying if the appraisal comes in like high,
yeah.
they won't use it they won't allow the equity to be applied to the down payment itself. But I've seen that they'll go back and negotiate with the seller and they could change like, the terms of the purchase so that they have money, coming back to them on that end, on the closing cost side,
Yeah.
not the down payment.
Yeah, okay.
Yeah. Good question though. Anyone on Zoom, any questions? And then we have an asset utilization program as well. So this is more so for someone that's retired. They don't have a steady job, they finish working. If they can't show sufficient income from either their social security or their pension, but they might have a really strong retirement account. We can go off their retirement account. We can even go off of crypto in this case as well. Same thing as savings and checking. With this type of program, savings and checking, they'll take the full face value. It's pretty straightforward. I mean, it's a very liquid asset, your savings account. Something like securities, the lender might only take like 80 to 90%. It changes, the guidelines change, but high level, you're going to think someone that's retired, they may not have a lot on paper, but on the asset side, they're very, very strong because they built up a strong 401k or 403b, whatever it may be. We can lend off, we can use that asset profile, and we can use that as their income. This is also 20% down, 3 months reserves. And again, just think someone who's retired, this would apply to them. Okay. And then the last one is written verification of employment and 1099. So this is applicable to realtors. So if you're receiving your 1099 year to year, you can provide your 1099 and they'll take 75% of that value and will lend off of that as your income. So this is someone, they might be a stockbroker, they might be a realtor. You don't technically own Keller Williams, you don't own Goldman Sachs, but you might have a very strong 1099, and then we can go off of that for your income. Okay, same thing with the written VOE is a little bit different than the 1099. This is someone that's, they might be in the restaurant industry, they might own a small business, they don't have an established payroll system like ADP, mom and pop type of shop. You would listen to your client, I own a small business, or I work for someone that owns a small business, I don't have ADP, I don't have a major payroll. We can take the written verification of employment form, their manager or their boss fills that out, and they state how much they make, and we solely go off of that piece of paper as their income. So someone with cash tips, they might be a hairdresser, they might work at a nail salon, they would list on that written verification of employment form the tips that they make. Maybe it's commission, and then their base salary, their boss is going to acknowledge that form and sign off, and the lender will use that form for their income.
Do you need a base salary necessarily, or could it be all cash?
It can be all cash, just as long as their manager or their boss is willing to sign off
Well,
on.
sometimes I've seen they're running a cash check as their salary in
Right,
the week.
right.
It's paid to cash.
It's
And that's-
fine for this program. It's totally fine, because we're not gonna ask them for the checks. Their employer or their boss is gonna write, they get 10,000 every X amount of weeks, say, whatever it is. And they're gonna write that on the form. If they have tips, we'll ask them to acknowledge the tips, and then they sign off. This is 2 years, so if someone's only, say they started yesterday, this wouldn't work for them. But if you've been in a cash business for a long time, this program works really well.
Let me go a step further about legal status.
For most of these programs, you do have to have at least a working visa, an EAD card. Anything other than the visa gets a little tricky, and I always say, like, case by
Every now
case.
and then I get, no, I got to receive something.
Yeah. Green card is fine. I mean, EID, we always have to check the class on the visa card. But that's why I always say, just shoot me a text with the scenario, and I'll run it by.
What about a foreign national?
We do have a foreign national program.
That doesn't apply.
That doesn't apply here, but we do have a foreign national program that we can blend on. That one's similar. You still have to put a little bit more down. You can't have a foreign national putting 5% down. They want to see at least 20% usually, but they will lend on a foreign national. This one, 15%, again, 3 months. And then that's really it for the programs. I don't want me to touch base and go back to any of the other programs back further. I know I went through it kind of quick, but those are the most popular of the non-QM. And again, we have a foreign national program as well. But these are your concrete ones that I would say will apply to most people that are self-employed.
Yeah, just really quick, the DSCR one that you were talking about, you said as long as the rent's able to cover it. Now, do you guys go by a loan to value, or is it just based off of the rental income?
So the appraiser is going to dictate the market rent. So not only are they going to appraise the value of the house, but they're also going to sign off on a rent schedule.
Okay.
So they'll look at the comps in that area for rentals. So even if I've had some clients, they'll get upset because the basement unit is rented for X amount, but an appraiser is not going to count an illegal basement unit towards. So it's really based on the true market comps of that area. So that's the only thing that the only catch I would say your basement units, typically an appraiser won't count basement rent towards the market comp.
Got it. So they're strictly just going by the income of the property.
Yes,
Yeah,
that's it.
That's it.
Even if they have high credit card debt or they have a car on there, the debt's going to come up, so we still have to do a credit review, but their debt's not counted towards them because it's strictly based on, like you said, the income for the property.
Now, if I took out this loan, show up in my credit report? Like,
It will come up on your personal name, yes.
Yeah.
If you take it out, if you do it as an LLC, the note, which is the credit obligation, will still come up on your personal name, but you can put the LLC in title.
okay,
And then this one, yes, the prepay is 3 years, but, for something where you're not showing any income, I mean, the prepay is, it's really not that aggressive. If you go lower than 3, you're getting hit, like your rate is definitely a lot higher. And these programs in general, like market rate right now for even a conventional loan, you're in your mid 5s to low 5s. FHA is a little bit better right now. We're seeing like high 4s for FHA. These programs, I would say, are more so in like the 6 to 7% range. So it's really someone who they really, really want the house, an investor who, you know, has a plan to pay it off sooner rather than later. But the rate, that's the only thing to note, is the rate's going to be a little bit higher for these programs because they're more aggressive. The risk appetite is, you know, different than your conventional products.
what's the difference between that and the commercial loan?
So for commercial loans, this is similar, but for most commercial loans, you don't need to show that you've owned a property in the past.
Okay.
Yeah.
So you don't have to show the 24 months on a commercial side, right?
Commercial, like it solely goes off of the specs of the commercial building. So we're gonna get water, we're gonna get what like the sewer is, like every single expense of the property, where this is more so just your principal, interest, tax and insurance.
Mhm.
Where commercial, we look at everything, like rent roll, water, sewer, like what's the estimate?
Maintenance, vacancy ratios.
Exactly, yeah. But yeah, I mean, again, in
Do you
this,
do arms on these?
these arms, no, but we do arm products. But the arm rates are still, they're not really drastically that different. So most people have been saying on the 30-year fix recently. But we do arms, but not on this. But yeah, these are 30-year programs.
Is there a pre-penalty payment, like if you decide to refinance and get into something conventional?
For this one, like the prepay on this one is 3 years, but you can refinance out of them. And go, yes, and like change your loan product, yes.
What's the penalty for it? What's your
It's like
it goes lower.
it's like a percentage that they hit you with on the loan amount. Yeah, it depends. I can definitely get exacts on the
Yeah,
penalty. Yeah, but usually it's a percentage of the loan amount that they'll tack on. But yeah, this is the summary, and again, we can send out this back to everyone and make sure that you guys have it. But the key takeaways, anyone that has a unique situation, I would say, just shoot me a text. I'll give out my cards if you guys don't have my contact information. This is my info as well. And really, it's just the market's changing. The rates are higher, so most people, like in a job, it's getting more challenging for them to qualify. So they are in a unique situation, such as some of the examples that we went over. I would say there's definitely a loan program for them. Okay. That's it. Any other questions?
Are these in portfolio loans or in-house?
So we're a broker, so these are with our wholesale lenders. But Fannie Mae and Freddie Mac aren't backing these loans. These are coming from like hedge funds for the most part. So like the hedge fund investors, they'll set the guidelines with, like, for example, one of our lenders is AD Mortgage, and then they're rolling out these products to us as the broker.
They're becoming more popular as interest rates climb, right?
Yeah, exactly.
Overall, are they, how are they in appraisals? I mean, I know in the commercial, they go income and expenses,
Yeah.
value. And return.
Yeah.
But generally, the appraisals, are you being more conservative? Are you not changes? or-
There's really no change. It's similar to because most people, believe it or not, are actually using this for, like I just did, an individual who owns like bagel stores across Long Island, and he couldn't get a conventional loan, so he went with the bank statement program. The appraisal itself is similar to like a conventional appraiser that would go
They're not
out
gonna
there.
go very conservative.
No, it's the exact,
Average.
yeah. He's going off of market comps, yeah.
Any status confirmed on stuff? It's 2025.
I have been seeing that sellers are more lenient in this market to give out, now that the market's changing a little bit, to give out a credit to help individuals buy down their interest rate. I've seen that a little bit, not like nothing too aggressive, but I've seen sellers be a little bit more giving in the sense that they'll give a credit for the interest rate, or they'll negotiate more on repairs recently.
Yeah.
You guys do small loans as well too? Like if it's like,
I think the minimum that they'll go down to, like you're saying, like if it's like something very like 100,000 or so.
yeah, like in the states, upstate. like,
Yeah, I think the lowest they'll go is like 80, but I honestly think that they might even go lower than that, but 80, I would say. Is the lowest I've seen. But you can do the DSCR in an LLC and almost like, I think it's almost every state at this point. But you can do it in your personal name as well.
What
either way.
about the property condition as they go, so they look at it or the festival with it, like an FHA loan, they look at everything? Or?
For FHA is definitely way stricter,
I
but
know.
these are similar to, I would say, similar to
Conventional.
conventional. Like, they're not gonna go after you for like chip fee, like they would FHA. I know a lot of information, but again, we'll send all this out. If you guys have any questions, that's my cell. Don't hesitate to reach out to me. That's my email as well. If you have any scenario, you can always call me, even if it's a Saturday, Sunday, shoot me a call. I'm more than happy to get on the phone with any of you, your clients. We can walk through any scenario. And thank you guys for having me.
Good. All right. So,
Hey. Should I